Hey, what's up traders, this is DFX Hunter. In this video I decided to just to a little bit clarify the time frame alignments and I will just try to break down how do I understand if the price will continue its trend direction or if it will retrace, right? So you probably heard, if you study ICT or smart money concepts, that the price is going from the external liquidity to the internal and from the internal to the external, which is basically the price swings, right? So yeah, that's all right. We can use these boards. Also, I think it's a little bit fancy, but anyway, let's do it. But let's try to understand what does it actually mean, right? So here on the daily, we can see that we are hitting the highs, right? So it's our external liquidity, right? Then where is our internal liquidity? It can be a fair value gaps, right? So next fair value gap below here is here, right? So now look that I'm looking at this on the daily, right? So that's with the time frame alignments. I'm using the daily for the levels and liquidity, right? So how do I know now if the price will continue higher or if it is time that we are going to revisit to make a pullback, right? So first of all, if you're looking at this chart and you can see that there was a 1, 2, 3 quite strong candles, right? You should not be probably looking the next day for the longs, right? Also, another important thing, now write this down, right? Because if the price closes above the level, then it will most likely continue higher. If it just tap it and closes below, then it's time to go for the internal, right? So let me show you a little bit let's start here, right? So we can see that here is, it was actually our external liquidity also, but you can see this candle has closed above, right? So what does it mean? That means that we will most likely continue higher, right? Into where? Into the next level, right? So you can see again we have closed above, so most likely we could visit the next one, and it actually has happened yesterday, right? So let me okay, like this, and now we are closing below. So what does this mean? If we closing below, it means that the market probably needs to take a breath, or at least it needs to go into the internal liquidity on the daily, right? So let me show you in here, for example, if we move a little bit lower, right? Because this is also our liquidity in here, and you can see it was hit in here and price closed below it, right? So once the price closed below it, next day the low was taken, right? And then it continued higher. Then once the price has closed above it, right, you can see how we continue up, right? So basically, if you look at this, we can see this is a previous month high from the June high, right? And also the Friday's highs, which is also the previous week's high, and the price has closed below it, right? So most likely it's a time to go for the internal liquidity, right? So this is what we know right now on the daily levels, right? Right now we need to find our entry levels, which would be on the 1 hour time frame, right? For the entry levels, right? So let's go to the 1 hour time frame. I also use the 4 hours, right? 4 hours and 1 hour. It's always good to look at it this way, right? So what we can see in here, right? So you can see this rate up, right? And then here is basically our inverted fair value gap, where is price being rejected right now. You can see how it's taking this high of this candle, right? And here is also this gap, right? So which is basically a balanced price range, right? And from here, we could potentially see a drop lower, right? So let's go to the 1 hour time frame. What we can see on the 1 hour here is actually the perfect breaker block, which is actually this last down candle, right? In here on the 1 hour. Also here we have a fair value gap, right? In here, for this one, I'm using the purple one, right? So it's a confluence of the two levels, three levels, right? Two levels. And also this is actually a order block, right? Why? How we identify the correct order block, right? Let me just put a purple here. Well, it's basically the candle, the last bullish candle before it takes out a liquidity. Now, will I be taking a trade from here, from this balance price? Of course, it's a nice level, right? However, what we want to do, we want to trade only in the premium. So what does it mean? If we plot the FIP, right, here is a 50%, so we want to take levels above a 50%, right? We do not want to take trade in here, right? So yeah, that's what I would be looking for. And here is actually where we could be looking for the entry with the stop loss. Stop loss placement is a category for itself, right? But what I'm doing, I'm placing the stop loss where my trade will be invalidated, right? Not anywhere here where I would like to, where I would be looking for some perfect entry like this, but I put it simply where it is invalidated for me, right? Now, what we can target, for me, the 2R, just 2R, is nice, right? So that's what I am currently working on, and there I'm trying to get most of the profit, and then I can leave the rest running, right? So what is these lows? As we can see in here is these Friday's lows, right? Which we could be targeting, right? So preferably, as said, we want to trade in the premium, which is above these levels, right? In here, yes, it's now changing, right? Changing the order flow, closing below this one. It took the Asian high, right? But I'm skipping the trade. I got my plan, and I would like to see price to visit these levels, or as said, I'm open-minded, right? If I miss it, then we can get a confirmation and then the pullback on the New York session for the continuation, right? So yeah. All right, so what is basically the main takeaway from this video is how to follow the candles based on how they are closing, right? The external to the internal liquidity, and then we have the profiling the daily levels, right? For the liquidity, for the external internal, 1 hour levels, right? So we have this 1 hour breaker block, 1 hour order block, also the fair value gap right in here. Right, so that's our levels, discount premium, right? We have the potential target, and then what we're doing, then we need to go to 15 minute in here, right? Also, we want to trade in the correct time. So currently, basically, we still can see that the price, the order flow is currently, it's bullish currently, right? So we need to wait for the change in the order flow, and it will be on the M15, and we want to trade basically the order block, but I will show you right now how, right? Change in order flow, or you know, as I see, it can be change in state of delivery, right? Whatever. So what we're looking for on the M15 is once the price reach our level, we want to see a close with the displacement below the level size. So basically we want to see a candles going up, right? Bullish, right? And then we want to see a bearish candle like this, right? Closing, if it is already in this level, right? Because we will see that it's taking this liquidity, right? This liquidity, right? Here will be this level, also this 1 hour is the liquidity. So once it closed below it, then on the close of this candle, I would be entering, right? Immediately, not waiting to leave it somewhere else and then come back, but immediately on this close on the 15 minute, there is an entry. All right, I hope this helps you a little bit with analyzing the markets and improve your trading. Have a great trading day. Bye-bye.